The big breaking news on your screen that CPI numbers have come record low level, 0.25%. Yes, last month if 1.44% CPI was not enough for this month, it has come in at 0.25%. And where are food inflation numbers? Minus 5.02 numbers, and that is compared with minus 2% which was there last month. To discuss these numbers, we have with us Aditi, Nayar as well as Madan Sabnavis. Welcome Madan and Aditi. Madan, I want to come to you first. Minus 5% of food inflation, how do you read?
No, I think again this is very much on expected lines. We also had the high base and the fact that prices have been moderating in the last couple of months. So I think that's why we're seeing good food price inflation in negative territory. We also know that inflation for pulses has been in the negative zone. Oilseeds is only one edible oil which has been positive, but otherwise I think this is a continuation of a trend which we have seen and more or less expecting. So while this would actually mean that maybe for the entire financial year, the average inflation rate would be lower than what the RBI had projected. But I would say it's nothing much to take too much of notice of because this is more or less in the expected direction.
Right, in the expected direction as per Madan Sabnavis, how do you read numbers, Aditi? Because if I tell you more constituents which has come in, rural inflation is minus 0.25%, urban inflation is in positive territory, 0.88%, vegetable inflation, and I read again, minus 27.57%. Last month it was over minus 21.38%. Pulses inflation at minus 16.15%, and fuel and light inflation has come in at 1.98%. Aditi, is it better than your expectation?
Absolutely. We had actually forecast inflation in this month at about 0.5%. So this has come in a little bit lower. So like Madan said, the direction is not surprising. We knew that inflation was going to fall a lot. We knew that it was going to fall to a series low. It has come in a little bit lower than expected. And the reasons for the fall broadly are twofold. One, of course, on the food side, Madan has already elaborated the points, the base effect, the fact that this year the momentum has been very dull, and then of course the impact of the GST changes. This is the first full month of the GST rationalization coming into effect, and that has had an impact on the price trends in various categories. So I would say that this is possibly going to be the low for the series. And as the base effect unwinds now, we'll probably start to see numbers normalizing over the next few months.
All right. If you talk about the core inflation, that has inched up a bit. If you talk about month on month, 4.4% this month. Last month it was 4.3%. How do you read core inflation numbers, Madan?
See, core inflation, again, I think if we take a closer look, I've not looked at the data, it looks likely that gold would again be one of the factors which has been pushing it up under the miscellaneous category. Otherwise, as what Aditi had mentioned, we have seen the GST impact should be felt more on the components of core inflation rather than food inflation. So core inflation will continue to be something which we know very well will be above the 3% range. And depending upon how this pass-through of GST cuts takes place, I think it will be manifesting in terms of low numbers. We should remember one thing that calculating the prices in the month of October could still be a bit tricky because we had seen that for a number of products, on account of the existing stock, the actual transmission would not have taken place to the full extent. So probably in the month of November, it should be a clearer picture as to what happens on the core inflation side, primarily on account of the GST rationalization.
All right, Aditi, when you say that the numbers may be a record low this month and from next month we may see a real picture or inching up till I would say the Q4 of the current financial year. So what will be your projection here? How much of an uptick can we expect?
So, before seeing today's number, I thought we were going to get prints around 1.3 to 1.4% or thereabouts for November and December. Then a step up in Q4 to like a 3% kind of a handle and crossing 4% in April. Now, after today's number has come in a little bit lower than what we were projecting, we'll obviously have to rework the trajectory. And as Madan said, we do need to watch out for the November numbers to see how the GST numbers, how the impact of the GST is settling on prices across the board. But I would imagine that the average for this year is now going to be even lower than what we had last penciled in. So possibly the average for this year will be somewhere around 2.2 to 2.3%, but we need to really rework our numbers after today's data. And then again, in the next couple of months, we have to use the incoming information to really understand how the impact of GST is settling across the board.
Right, and some more constituents of the CPI route. Housing inflation is at 2.96%, clothing and footwear inflation is at 1.7%, and fuel and light inflation at 1.98%. Madan, I want to understand that housing, clothing, fuel, of course, in positive territory, but it is well below what anybody's concern may be.
Yeah, absolutely. I think this is again on expected lines because when we're talking of something like housing, this is something based on historically what have been the rental value which has been taken. And I believe MOSPI is actually working on looking at a new way of looking at this house rent component of the CPI. Maybe at that particular point of time when we have the revision in the index, we may see a more realistic kind of number, more likely to be upwards because we see that rents normally do tend to go up, something which we are not seeing on a month-on-month basis when we look at the current CPI index, because I think a large part of this is being determined by the pay commission and what is the HRA which is paid to central government employees. Now, things like footwear, which you spoke of, I think ideally the rate should be coming down because we have seen rationalization in terms of GST. And if it's not getting manifested directly in terms of lower prices for these products, it's something which we could be expecting to see as we go ahead in November. But we should remember that carry forward stocks at the old prices is something which, even though the government has said that there will have to be this adjustment made, it has not really happened at the ground level. So this is something which is work in progress. And typically, I think this should be moving in the downward direction as we go ahead in the month of November and probably also December.
Right. Aditi, what will you expect RBI to read this data when there is an MPC meet next month? How do you think they will react to it?
On the basis of today's data alone, I suspect that we will get that final rate cut in December. However, there is still quite a bit of other information which will come in over the next 2-3 weeks before the MPC has to meet. The IIP data, which will give us some, inkling into how durables versus non-durables and other components of manufacturing have moved with GST. Then, of course, we'll get the Q2 GDP data on the last working day of this month. And also, what kind of progress we have on the trade deal with the US. All of these components are also going to be important. But just looking at the CPI data alone, having come in at less than 0.3% in this month, and the average again for the full year getting pulled down closer toward 2%, just about 2%, which is the lower end of the medium-term target for the MPC. I do think that a rate cut looks highly likely. And of course, transmission also. I mean, the MPC has been focusing a lot on transmission of the past rate cuts. That will also matter. But simply looking at the CPI inflation data, I think it certainly increased the chances of the likelihood of a rate cut in the December policy.
All right, so likelihood of rate cut as per Aditi's prediction. But Madan, I want to understand from you, being devil's advocate, what could be the villain in the party if I talk about the constituents of the inflation itself?
Yeah, first let me react to what Aditi has said. I think there is no chance of a rate cut this time because whether it's 0.30 or whatever the inflation number is, I think this is something which was taken for granted, and the RBI actually would be expecting the inflation number to be in this particular range of 2 to 2.6%. Now, the other thing is that when the RBI actually announced a policy in June, it actually said there were limits to which interest rates can affect growth. So therefore, I think the market got spooked, even though we had a rate cut and a CRR cut. Let's come to the last policy in October. The RBI actually said it was open to being accommodative, provided growth was affected. So today, I don't think the focus is going to be on inflation when it comes to interest rates, because I think the commentary and the entire articulation so far has been about growth. And today, if we are talking in terms of growth being more buoyant than what we had expected, in fact, for Q2, we're looking at a number maybe even above 7%, and for the entire year we could be getting a number around 7%. There's no need to actually lower the interest rate to protect growth. Inflation anyway is down, and I think the RBI has also said that future inflation is something which is more important. So when I say future inflation, when we're talking of inflation maybe in Q4 or the Q1 of next year, where the RBI is now taking a one-quarter view for the next financial year, we're really talking of a number of around 4% or a little more than that. Now, if I look at 5.5% inflation, 5.5% repo rate, 4% inflation, we're really talking of a real interest rate of 1.5%, which to my mind is the kind of an ideal rate which the RBI would like to maintain. This also considering the fact that lowering the interest rates in a hurry could actually create a problem for the banking system, because today the banks have a problem of deposits not rising, funds are migrating to mutual funds, liquidity issues are coming up. So today the RBI is also worried about liquidity. In fact, the market participants are looking for an open market operation announcement. So I think to get out of this loop, I think a pause is more likely, I would say. So I would not really say that that would be something on the cards as of now. But of course, the wisdom of the 6 MPC members would matter more than what I'm saying out here. So if you're talking about, can there be any surprise element? No, not to my mind, because whatever numbers we're talking of in terms of core inflation, which is something which is more likely to be influenced by monetary policy, it's all going to remain in this tolerance limit of around 4%. So I don't think inflation is going to be a factor. Policy is going to be driven more on account of growth actually being on the right path, especially so since we're expecting some kind of an agreement with the US on tariffs, in which case I don't think there's a need to lower the rate at this point in time.
All right, a point well taken, Madan and Aditi. Thank you so much for joining at this hour with your views. And of course, as the regulator says, everything depends on the data, and much of the data is awaited, especially this month before Reserve Bank of India takes call next month. Thank you so much for your time.
Thank you.